Stop listening to the bears and all the negativity in the stock market. This is ridiculous. Look at what we made yesterday, 6,000, okay? Now, we're going to refresh the screens. Well, we got one dividend yesterday. Small, very small, from one of our stocks, not our funds. As you know, we're making $95,000 a year in dividends. Don't get caught up with what they're saying about the inflation and strong GDP. If there's strong numbers, there's strong numbers. Just buy them. Stop. Here are the dividends we make per year. Stop psyching yourself out. Stop fearing everything in the stock market. The market goes up 7% a year on average. It pays to be positive. Check out one of those other videos I made on the attitude of gratitude and how the power of positive thinking and polar opposite thinking of what the world is doing can lead to our performance in the market. Let's look at our performance. So we're up 19% to start the year, whereas the market's only up 6 and 3 respectively. So how are we doing this? Because we're buying when everyone is scared, and that's the rule. That's what you do in the stock market. You buy when everyone's fearful. Look at the SPY. We're up 0.5% already to start the day because of the positive CPI number. We had lower inflation, higher GDP. This is a perfect number. We're getting above this 200-day moving average, the orange line. This is a perfect setup. The economy is humming. The bears are saying, oh, well, the Fed's going to have to raise rates more because the economy is so strong. Well, eventually, you have to stop using that argument, guys. Y'all have been saying that for a year straight, and you keep waiting for the economy to slow down. But look, it's 70% consumer driven. Okay, the consumer has jobs. If we have low unemployment, record low unemployment, then we're going to keep consuming. If we keep consuming, then where's the slowdown going to come from? I don't get it. If you lose your job, you'll find another one. You'll also get unemployment benefits, and you can still use that to spend, which gets the economy going again. So, yeah, they might have to raise rates a little more to tame inflation, but we're still growing at such a strong rate that it's not affecting our growth. And even if they raise rates to 5% or even 6%, guess what? Historically, that's still low compared to where we were in the 80s. We were trading at 8, 10%, double digits in interest rates even. Now, we're still historically low. And they might say, well, the rate of increase was too much to handle from 0 to 6. Well, we took that big rate of increase in 2022. Now it's going to be gradual rate increases from here. We can take this, and then pretty soon they're going to start cutting rates because the Fed's fund rates by 2025 projects to be at about 3%. So if the market's forward-looking 12 months, and then to get to that under 3% number, they have to start cutting in 2024, or at least raising less in 2023. So the market's going to go higher no matter what, I think. It's too cheap. It was off 20% from the highs in 2022. You have to buy low, sell high. You have to forget everything else and just trust in principle truth. And what is the principle and truth? The S&P goes up 7% a year. You buy low, you sell high. You can't time the market. These are all truths in the market. You need to stick to these principles. Okay, look at a video that I made earlier on God is principle, truth, and spirit. And when you follow God, all things are possible. So anyway, we're going to do another update later in the day to see how the market's going. But for now, it hasn't opened. I just wanted to show you that yesterday we were up 6,000 on a flat day because passive income outperforms all the time. And today, the market's going to be a little wobbly out of the gate as the stronger than expected number makes people think it's going to get worse since the Fed has to raise rates more since we're having strength. But that's a perverse theory. Stop thinking like that. Think about how rates are low overall. Think about how everything is humming and how you have to buy these dips in the market, what the market averages per year, 7%, and buy, put it away. Don't think about it ever again, and just live your life financially free through passive income. Stay tuned for further videos. Thank you.